Hello there, everyone. Thank you for the opportunity to rub minds with you today. I'm going to be talking about open banking, particularly around strategies to harness opportunities presented by open banking. And I have a short outline today, just from an introduction perspective, open banking. And then I'll talk a bit about the state of play of open banking globally. And then I'll come back to Nigeria and talk about the opportunities and the challenges we see in our market. And at the end of it, I will leave you with some thoughts, some questions, and what I consider the imperatives for open banking and players that are looking to play in that space. So let's jump into it. Let's watch.
In 2016, the Competition and Markets Authority published a report about banking. It found that older, established banks didn't have to compete hard enough for customers. Newer, smaller banks were finding it difficult to access the market and to grow, which meant customers weren't given enough choice or control over their money or financial information. So, open banking was born to transform the way customers bank online. Open banking aims to re-energize banking by making it easier for customers and small to medium-sized businesses to give access to their transaction data, compare accounts, and access new products. So how does it work? Open banking allows you to give consent to regulated third-party providers to securely access your bank transaction history or to make payments. You could give consent to a regulated price comparison website to access your current account transaction history, to find a better account or overdraft for you based on your actual spending. Or for businesses, you could give access to your business bank account transactions, which could make accounting easier or speed up the process of applying for a loan. Open banking could help you move, manage, and make more of your money. You are always in control of what transaction information you choose to allow access to, and you can stop access to your data at any time. So here's an example of how open banking could improve the way you manage your money. Let's say you want an overview of all of your accounts with multiple banks in one app. You choose a money manager app from a regulated third-party provider, which uses open banking. The app asks if it can access your account and transaction data safely and securely with open banking. If you consent to this, you'll be redirected to your own bank's website, where you'll log into your online banking as usual. Your login details stay private and are never shared with the Money Manager app. Your bank will ask you to verify it's you and confirm you're happy to give the Money Manager app access to your data, what type of data, and for how long. You'll then be redirected back to the Money Manager app. The Money Manager app can now analyse your account transaction information to show you how much you're spending and on what types of things, which could help you manage your money more easily and effectively. Open banking is being designed to be safe and secure for customers. Every third-party provider enrolled in open banking is regulated by the FCA or a European equivalent and must comply with data protection laws. Plus, with open banking, you'll never be asked to share your password or login details. Your data is encrypted and you are in control of who has access to your transaction data and for how long. It's safe, it's secure, it's revolutionising the way we manage our money. It's open banking.
Excellent. All right, so let's dive into it. And I hope you found that video enlightening, particularly in terms of what exactly open banking is. I like the example there, just helping you to manage your money. That same example will go for a third party who's helping to provide you a loan product. It's the same example we can extend into an insurance provider. Same example you can extend into just about any provider of a product or service that would be beneficial to a customer if the customer is able to show from his data, from his information available with his or her bank that indeed he's a trusted recipient of that product or service. So the power of open banking really, and the promise of it, is in its ability to open up data that is otherwise dormant. And if you look at this promise of open banking, yes, it's to banking in particular in the context that we're speaking to today, but really it's a promise that you can extend into the larger financial system, and that's talking about open finance. And indeed, we can extend it into the larger economy, and then we're talking about open economy. So at the heart of it is empowering customers, all right? And understanding that banks are custodians, not owners of customer data. The owner is the customer, all right? Banks and third parties are always custodians. Whoever is in custody of that data is not the owner of that data. And so the first principle is understanding that the customer, the data belongs to the customer, all right? The second one is that banks and other such third parties are custodians, all right, when they have customer data. And then the third paradigm from an open banking perspective is that there is inherent value locked in this data. It's like dormant value. The value is there. There's a lot of promise and potential, but it's largely dormant. And if you take, for instance, the banks we have, I look at my bank for the last over 20 years. I have different banks, but probably my main operating bank have had data being generated for the last 20 years. That data is largely dormant, except for maybe my bank is used to provide me some products or service. So imagine if all that data is available to different providers of products and services, how my experience can be so much more enriching from a banking or financial services perspective. And that's really the promise of open banking. So here, just talking about the definition, what I basically do on this slide is just trying to break it down in a nutshell. So it's about, the banks, the custodians exposing data assets, all right? It's about understanding the APs and the ACs, common terminologies in open banking, the API providers, all right? And the providers usually have the data and they're able to expose that data using APIs. And the API consumers are the innovators, the providers of products and services that really offer that to the customers. Another really important paradigm is around the APIs, the whole concept of APIs. So banks will argue with you that, well, we've been consuming APIs or exposing APIs to fintechs, but not in an open way, all right? So those are largely due to models where there's some physical interaction and then we agree and there's some processes and so on and so forth. In an open banking world, the APIs are open, all right? So you enroll the developer portals, you go and study what is required to consume an API, and so on and so forth, and you can consume the APIs. So really, it's a different model. The collaboration is more straight through. There's very little, if any, physical interaction. And these assets, what assets are we talking about in banking? KYC, key data, customer information data, and transaction data, massive for customers, all right? And if you look at the objectives, from an open banking perspective, we are talking about driving ecosystem collaboration, scaling distribution of banking products and services, driving innovation, and increasing revenue. Quite frankly, a major promise of open banking is financial inclusion. How can we deepen and broaden financial penetration, especially in emerging markets like Nigeria? All right. And if you look at the drivers, there's a lot of regulatory push globally, and I'll touch on that as we go along. There are new entrants also. The fintechs are also driving the whole open banking discussion and agenda. And also we're seeing a lot more platform play also lending itself to the open banking, because the platform play also is big on APIs. How do we expose products and services via APIs? And we'll talk a bit more about this going forward. So open APIs and open banking can deliver new value streams for banks, all right? So it's important for banks to understand this, that it's not only for the fintechs, but also for the banks. And generally, for the customer, there's value for everyone when open banking really works the way that it's, architected or envisioned to work. So the first thing is, all right, when you take in an open banking world, one of the first value streams that we see is the ability for open banking to help forge profitable partnerships and extend market reach. Yeah, that's the one that is really important, because if you look at banking today, banks are quite limited in the reach and the coverage that they have. And one of the promises, all right, that open banking brings to the table is how do we extend that reach, not just for banks, but also for fintechs, for all, also those looking to play in financial services. How can we extend that reach? How can we provide more products and services? The answer is that we need to get into that data that is dormant and expose that data. And once that data is available, obviously customers can have much broader and much deeper financial offerings. So the first sort of value stream that is really important is that ability for open banking to extend reach. Really important. The second one is innovation and growth. Obviously, that's where the API consumers come into play. Once that data is available to be exposed, it will naturally drive more innovation. And therefore, the customer is the winner in all this, because the innovation, the data, more services, more options for the customer. And lastly is also monetizing data and creating new business models. That's really important as we look at digital, as we look at the tech giants and how the tech giants have created value out of data. It's a lot of banks, that's also benefit that will come to a lot of banks. A lot of banks are clearly not at that level yet where they are actually monetizing data. And so that's part of what open banking is going to allow. It's going to allow revenue shares. It's going to allow the customers to get more. And in that whole process is value. And therefore, ultimately, the monetization of data discussion becomes something that is real and not just something that we're talking about in theory. And we see a number of case studies where leading global banks are already doing this. We're seeing, people like travel companies like Expedia, Booking.com, e-commerce companies like Amazon, already exposing APIs, monetizing APIs, growing their revenue significantly by leveraging APIs. And so when we bring that to banking, the real, question we're dealing with is, how do we raise the state of the play in banking to where the tech giants are today? So we see an evolution. As I said earlier, open banking is the subset of this larger discussion around the open economy, open finance. At the heart of it, without repeating myself, really is exposing these data assets. Because consumer centricity is extremely important in all this, because at the end of it, really is more products, more services, more innovation from a consumer perspective. So it's all about consumer centricity, less of the end consumer. And a big part of this is collaboration, all right? So the organizations that are going to thrive in this new dispensation we're going into now with open banking are those that are more agile, are those that are more open to partnerships, are those that are more collaborative by design. By design, they're used to exposing assets, and they are also, re-architecting themselves to consume this open banking or data assets. So, okay, let's talk a bit about where open banking is globally. And a number of countries are embracing open banking. Globally, we are seeing, I mean, this play, you know, one of the first places we saw open banking really take root was in Europe. In the UK, UK's open banking play now is about 4 years in implementation, and now really gaining traction. In fact, the UK has crossed the 5 million mark for number of customers that are actively using open banking services now, over 5 million and growing. And in fact, they moved from 4 million to 5 million in less than 6 months. So you can see, you know, the momentum is building in the UK. And in Europe, we also know about PSD2, which is, you know, quite a similar regulation on open banking. The European models are the models we call the regulatory driven model. So the regulatory push, as you saw in the video that I played, was more around how do we drive innovation? How do we improve competition? How do we make it easier for the fintechs to flourish? All right, and that's what sort of drove that open banking model in the UK and in Europe. We also have other jurisdictions. Some are being market driven. We're seeing market driven models, and we're also seeing models that are sort of a hybrid, you know, which is both, you know, market players like banks and fintechs driving the agenda, and the regulator obviously being aligned, you know, with that perspective. But I think the message on this slide is that as we look from Asia to Europe to the US, we're seeing markets moving on this open banking trajectory because I think the value case is proven now, and it's a question of who's really going to scale this out. And Africa, slightly behind, but I think we're beginning to see Nigeria and a few other African countries get into this discussion on open banking. So I spoke about the models. We see three large models, three main models: the regulatory driven, the market driven, and the hybrid I explained. So in these slides, I will basically touch on a few things where we see the differences on these models. In this is the UK model, which is, you know, sort of, which typifies the regulatory driven model. One of the things we see here is the concept of the open banking directory. And the open banking directory is where all players in open banking are registered before they even get into any provision of products or services, all right, in the ecosystem. So that's a regime where you have a record, all right, in a digital open banking registry of all the players. Another sort of unique thing about the UK model is how they govern consent management. Now, consent management is extremely important in open banking because remember what we said, the data belongs to the customers and the customers must consent, all right? Remember the video, they have to consent before a provider makes that data available and before a consumer uses that data. And that consent is also time bound. So it's not just the what, is also the when, you know, and how long you can use my data for, and the what you can use my data for. So consent management is extremely important. It's a very digital process, so there's no manual interaction, but it has to happen. It has to be auditable. You know, it has to be a process where, you know, you can confirm when the customer actually authorized the use of his data, and then what he or she authorized it for, how long he or she authorized it for, and so on and so forth. So consent management, really important. What the UK has done, and we're seeing this with the regulatory models, is to have an entity, the open banking implementation entity in the UK, driving directory services, all right, which is managing registration of all players, and secondly, driving consent management. So that's also really important. How that works, at the heart of it is the OBIE in the UK. And that's the sort of summarizing the regulatory model. In the Next model that I share, this is the market-driven model, and this is from the US. You'll see that this is quite different, and you know how the play is evolving in the US is very much being driven by the market. So the banks, the fintechs coming together under the Financial Data Exchange Initiative to drive the open banking agenda. And of course, it's also regulated, you know, by the regulator in the US. So if you look at how consent management is done, so that's between the customer, for instance, and, you know, the API providers and the consumers. That's how consent management is done. And from a registration perspective, it's going to be you're registering with all the API providers. All right, and in the third model, we see this from India, where it's a bit of a hybrid model. So you have the players, also the banks, the fintechs in India saying, look, we want to do this, we want to do it at scale, and of course, we want to do it, you know, under the supervision of the regulator. And in the India model, it's slightly different, you know, in terms of how the model is set up to manage consent, to manage directory services, is the whole concept of the account aggregators, all right? And the account aggregators basically are working in the middle of all the consumers, providers, and the customers to ensure that directory services, consent management, and, you know, the whole innovation play is working quite well. The India model is doing quite well. Scaling, just as, you know, we're also seeing the UK model also doing quite well. So key takeaways from jurisdictions as we look at open banking implementation. In the regulatory model, we see regulators setting up an independent entity to drive the whole open banking agenda. And that's really important, because when you take a look at, you know, the landscape, you will find that we have banks, we have fintechs, we have switching companies, and as long as you provide some form of API or the other, which many do today, people will argue that you are not independent, and therefore it may not create a level playing field if any such entity has to, you know, play particularly the consent management or the directory services role. So why we've seen the regulators do that in other climes is largely around ensuring that there's a level playing field and we're not sort of getting trapped in what we're trying to get away from. Another important part of this is standardizing APIs, all right? So there's quite a bit around the standards for APIs. And, you know, these standards are published by the regulators. The ecosystem has an opportunity to review, to provide perspective in exposure drafts, and then these things are finalized. I've spoken about the directory, I won't repeat that. And also the implementation schedule. So that's also important. Clarity around the roadmap. We see in Brazil, you know, very clear roadmap, very clear milestones, a very clear framework on how open banking is supposed to evolve. And you can see the responsibilities and accountabilities in that program. So that's really important. All right, so moving on quickly, we'll talk about the opportunities and challenges as we come home. I'll just try and contextualize this for our market. So one of the things we see in our market, for instance, is the penetration of credit products. From a retail perspective, that has been historically quite low. We're seeing a number of fintechs, microfinance banks, neobanks attacking that opportunity in Nigeria and indeed in Africa. An example here of partnerships that have attacked that opportunity and been able to do it at scale would be the CBA, the KCB, the Safaricom partnership on the Fuliza product. So these are some of the sort of partnerships that, you know, can become so significant from an open banking perspective and create a lot of value for customers, and of course, a lot of value in the ecosystem as well. We're seeing DBS also move in a platform model quite strongly, exposing APIs and consuming APIs focused on different sectors of the economy in Singapore. And the whole play is around how do we open up data assets that we have, of course, working with customers and ensuring that they consent to these things, and consuming also data that are external, to the bank. Open banking can spawn new business models through API monetization. I started to speak about this. In an open banking model, at the heart of it is exposing APIs. And you will find that traditionally consumers have to pay because consumers are getting the benefits. So in that traditional model, the consumers pay, the API consumers make good revenues. They can share those revenues with whoever is in the value chain, even API providers, switching companies, and the likes. And we're also seeing models where, a number of APIs are free to the to the customers. And also we're seeing models where customers also get paid, all right, for making available some of this data that can then, be used to create products and services by API consumers. So we're seeing different models, and I think the message here is as banks, fintechs, organizations look at the whole open economy, the question really is where do you see the opportunities, and how do you want to seize the opportunities? How do you want to seize these opportunities? There are still challenges. I think regulatory direction is a big challenge. Regulators are grappling with what all this means. Obviously, openness and security will always be a big concern. There are also challenges around awareness. If you look at the UK model, the uptake was initially quite slow. Awareness. But, because this also deals with change, it deals with human behavior, it deals with people also saying, hey, who are these guys? Why am I giving them access to my data? What does this mean? Does it mean my data is being compromised? So as awareness improves and people are able to embrace this more and able to probably advocate for this more, even, amongst friends, amongst family. Legacy issues also, it's a big challenge as we look at open banking, because remember, a lot of the things that you want to deliver at the front end, they need to be supported by your back end. And APIs expose what is available in your back end, your data, all right, data of customers. So again, there's a lot of, legacy, there are a lot of legacy issues that banks need to deal with to ensure that, they can be more agile, more nimble in the open banking play. Fear of disintermediation is another reason that we also see when we talk about open banking. All right, so as I bring this to a close, I just want to share a few thoughts, a few questions that I think, as you look at your open banking posture, you really want to reflect on and address. And the first one really is around embracing open banking, not in terms of another technology buzzword. It's not the new big thing, the next big thing. It's really about how is open banking going to create value for our organization, for our customers, as we look at ourselves, look at our business strategy going forward. What does this mean for us? Do we have clarity on it? And where do we think there's value to be created? Do we see an opportunity to grow into new market segments, underserved markets? Is there a way that we're going to be more nimble, more agile, more competitive? So it's really first around that business strategy, all right, from an open banking perspective. What do we want to do with this? The potential is huge, but what do we want to do with it? And where do we think we're best positioned to play? The next question I would like you to ask yourself is, how significant are the adjustments we need to make to our business and operating model to realize these benefits? How significant? How good are we from a collaboration perspective? Do we have the right talent? Do we have the right people? Will our culture support this? How innovative are we? How, it's not just about a bank sitting back and saying, look, we can be API providers, but a more holistic model is looking at, we can be API providers, but we can also be API consumers. I mean, I have 10 million customers, but there are 40 million customers out there. All right. So it's really about then saying, what do I need to do to my business model to harness this huge opportunity? All right. And how significant are those changes that we need to make? And the third question, the final question is, what is the implication of open banking on my risk landscape and on my cyber capabilities? All banks have one form of cyber program or the other, given the threat landscape, the actors we're seeing now, state actors, and all sorts of things, ransomware attacks. But open banking will mean more exposure, all right? And therefore, what does this mean to my risk landscape? And what does it mean for my capabilities? What do I need to do differently as I go in this direction? All right, from our perspective, our response, our framework, our methodology at KPMG for managing the open banking opportunity is what we call the connected enterprise. And that connected enterprise sort of makes it important to look at the organization, not just from a front-end perspective, but from a back-end perspective. It's understanding that to be future-proof, you need to connect the front, the middle, and the back office. All right, the things you expose to customers in an open banking world, there are assets that are really kept, in your back end, by your back end systems, by your back office. So how do you do this in a more agile way? How do you create more value through the enterprise? How do you ensure that the growth you want in the front is supported all the way through to the back? We call it the connected enterprise. Thank you. Look forward to hearing your questions and your feedback.